Hello everyone. In this video, we are going to be talking about alternative investments or form of investment. But under alternative investments, we are going to be talking about security-based lending. Before we go further, my name is Martin Zopolua. What is security-based lending? The term security-based lending refers to the practice of borrowing or lending money using collateral as security. What is collateral? Collateral means sometimes assets that we can pledge as security, and we have various types of collaterals. We have the residential mortgage, whereby you use your house as a security. We have real estate. We have cash collaterals. We have various collaterals that we can use as a security to be able to collect or borrow money. And what is security? Security just means like guarantee. So security-based lending simply means that, okay, if I want to borrow money from a company or a financial institution, what are the things I need? One of the 5 C's of lending is collateral. We have 5 C's of lending. We have collateral, we have capital, we have capacity, we have condition, and we have the character of the borrower. So collateral is part of the requirement of lending. So collateral simply means the assets that we pledge as security. So simply put, security-based lending just simply means, the name is just like the collateral that we use to borrow money. So what are the parties involved in security-based lending? We have the lender, who is a private bank or a large financial institution, and we have the borrower. And the borrower is not just anybody. The borrower of security-based lending must be someone that is financially buoyant, someone that has significant degree of wealth. When we are talking about Adenuga, when we are talking about Dangote, people that they have wealth, that they are rich. When we are talking about Legushe, when we are talking about Oni of Ife, people that you know that yes, when you hear that, you know that yes, the first thing that comes to your mind that these people, they are rich. So this kind of loan, the people that are qualified for this kind of loan are those people that have significant degree of wealth or capital. People that you can know that, okay, fine, when they say they want to collect money, it's not just maybe 5,000 or 10,000. People that you know that they are collecting millions, billions. People that want to borrow billions, and it's not just anyhow banks that can just give her this kind of loan, like microfinance, and they don't have the capacity to for this kind of loan. So the kind of lenders in this kind of category are big banks, are private large banks, are large financial institutions that they can be capable to be able to disburse loan and to be able to borrow these wealthy people, this kind of individual, a company, the money they need. What is the usefulness of this security-based lending? What do they want to use this money, this loan you want to collect? You cannot just come to me and say you want to collect money, come to the bank and say you want to collect money to throw up a party. No. People, what they use this money for tangible things. They use this money to invest in businesses. They use this money to purchase property. They use this money to go into large transactions that will be beneficiary to them, that will bring more source of income, not for things that will not bring profit. Like when you want to do naming, you want to do party, you want to for people to know that yes, you have arrived, just come on social to get gathered like iPhone 14 that is trending now, just so that they can know that yes, you arrived. So you want to walk up to the bank and say, I want to collect loan to buy iPhone 14. No, they don't give this kind of loan to this kind of people. This kind of loan is just for people that want to enlarge their business transaction. They want to invest, they want to buy business, they want to acquire real estate, they want to buy business parts that are beneficiary for them. SBL work, our security-based work. The borrower goes to the bank or a financial institution to borrow money. He's required to fill a form which contains details of what he wants to use the money to do, the loan to do, what's the purpose, the duration, how much he wants to borrow, and a lot of that. And it is the experience of the lender to ask for his security, the collateral, and the lender assesses the collateral to be able to determine whether the collateral and the money the person wants to borrow is in line with each other. For instance, now if I want to borrow 50 million and my collateral is like 30 million, I'm not eligible to the loan because my collateral cannot cover the amount of loan I want to collect. So for that kind of situation, I'm not qualified or eligible for that kind of money. So after going through all those process, the lender goes to the bank, fills form, the lender evaluates the assets to determine whether it's eligible for the loan. Then after this process, if the borrower is eligible for the loan, then the lender approves the loan based on the US Treasury note. After that, the borrower is given the loan within few days, and the interest charged in security-based lending is just 2 to 3%, 2 to 5% based on the London Interbank offered bank rates, or it can be higher than 2.2 to 5% if depending on the amount the borrower wants to collect, but it is always 2 to 5% rate. And after all this process, the bank collects the collateral and deposits it in the account, so that in case the borrower defaults, the lender can bounce back on the security and sell the security to be able to collect back their money. For example, now to understand better, someone like Sienna Empire, Toyin Lawani, as we all know, the king of fashion, she wants to start a fashion academy, and she needs money. She will need money to buy equipment, latest equipment, and those equipment are very, very expensive. She will need to buy space, or maybe she wants to build an house, and she will pay for services, pay for the collaboration of makeup artists and photographers that will be able, and pay for models that will help her to fashion her clothes, to showcase her clothes. And she uses models to cheat. All these equipment are very expensive, and she will need more to go into the academy. She can walk up to a private institution or financial institution to collect loan. So she walks up to them. She tells them that this amount I need 50 billion naira to run my fashion academy. Then the bank brings out the form. She fills a form. Then the bank requests for a collateral which can be used as security for the loan she wants to collect. Then if the collateral she brings is valued and she's eligible for the money, then they go on with the process. The lender collects the collateral, then they continue information, then the loan is approved based on our portfolio and based on US Treasury notes. And the interest rate in security-based lending is very, very, very cheap. And it's between 2 to 5% based on the London Interbank offered rate. Then interest rate is charged. Then the lender becomes the lend owner of those collateral in case she defaults in payment. So the lender has the right to sell the security so that they can be able to recover the loan or the amount she borrows. Advantage and disadvantage of security-based lending. We have it allows the business owners or the company to grow. It provides capital for them. It generates invoice for them. It's flexible. It gives them better interest rate. It allows them to acquire property. It allows them to invest it allows them to execute business transaction. It allows them to purchase, to acquire assets, to acquire personal property, to go into business, to be able to. It allows them to have revenue, to have income. They have a lot of advantage, but yes, there's also disadvantage to everything. So one of the disadvantage of security-based lending is that we know the situation of the economy right now, as the inflation rate is very high, and if the amount the person collects is not able to meet the target of what he or she wants to do, it's going to affect the person, and the person may not be able, or the company may not be able to pay back as at when due. And if this continues like that, the lender may be forced, or the bank may be forced to sell it as security.